The euro extended gains as part of a correction. In the early European session, bears made an attempt to break below 0.9646, but the price formed a false breakout, thus creating a strong buy signal. Then the price consolidated above 0.9687, led to an increase in the volume of long position. As a result, the European currency approached 0.9835, followed by a slight pullback. Yesterday's data on euro area consumer confidence turned out to be downbeat, although the indicator met analyst forecasts which helped the euro hold steady. German annual inflation rose by 10% in September, beating economic estimates. In addition, the US reported statistics on weekly jobless claims and GDP for the second quarter. The US economy contracted at a 0.6% annualized pace. This news exerted pressure on the greenback, which slid against both the euro and the British pound. The latter managed to recover amid measures taken by the Bank of England on Wednesday. This means that panic in the currency market has subsided a bit, which results in a stronger pound. However, today the situation may change dramatically. The point is that today's macroeconomic calendar includes data on UK GDP and business investment. In the second 3 months of the year, the British economy is expected to shrink by 0.1% quarter-on-quarter and expand by only 2.9% year-on-year. True, the pound sterling may keep gaining value, but its bullish run is likely to be limited in case of gloomy statistics. As for news releases from the euro area, Germany is set to report retail sales, which are forecast to decline. On the one hand, this is a bad sign for the economy as it affects its growth rate. On the other hand, it may help cool inflation. Thus, the indicator will hardly have a severe impact on the euro's direction. Besides, traders may take notice of the unemployment rate in Germany and the euro area, as well as eurozone inflation. Consumer price growth in the 19 countries sharing the euro currency is anticipated to accelerate to 9.7%. If the reading exceeds 10%, the euro may come under pressure again. If inflation meets market expectations, the euro will most likely post further gains. As for the unemployment rate in the euro area, the indicator is expected to remain unchanged. In the second half of the day, it is worth focusing on the core PCE price index, which is of great importance to the US Federal Reserve. Thus, a disappointing reading will confirm that the regulator needs to maintain its aggressive rate hike path. This in turn will boost demand for the dollar. Furthermore, traders may pay attention to personal spending, speeches by FOMC members, as well as the University of Michigan's reports on consumer sentiment and inflation expectations. If the indicators are below analysts' forecasts, this will prove that the economy is sliding into recession. From a technical point of view, the 1-hour euro-dollar chart shows that the level of 0.9776 and 0.9835 act as support and resistance respectively. A false breakout at 0.9776 will create a strong buy signal which will lead to a rebound on 0.9835. However, this scenario is unlikely. I believe that the euro will slide to this range, then bulls will push the price up by 15-20 pips and the pairs dynamic will slow. Its further movement will depend on US macroeconomic statistics. If the price breaks through this range, the euro will dip to 0.9730 and 0.9687. At these levels, I recommend going long on a rebound. Alternatively, if the European currency breaks above 0.9835 and tests it from top down in the first half of the day, it will be possible to open long positions counting on a rise to 0.9895 and 0.9952. At the level of 0.9952, traders may go short on a rebound. Short positions at 0.9895 and 0.9835 can be considered only amid a false breakout. After all, risky assets have a slim chance of extending gains without strong drivers. Moreover, Russian President Vladimir Putin is set to announce that Donetsk, Lugansk, Kherson and Zaporozhye regions are now part of the Russian Federation. It remains to be seen how European countries will react to this fact. Thus, the situation is uncertain, and it is not worth rushing to open long positions, especially at the end of the week. Speaking of the British pound, a false breakout at 1.1071 will create a buy signal, thus pushing the price to 1.1136. If the pound sterling consolidated above this level, it will most likely advance to 1.1193 and 1.1268. At the mark of 1.1268, it will be a wise decision to go short on a rebound with a view to catching an intraday correction of 40 to 50 pips. Short positions at 1.1136 and 1.1193 can be opened only in the event of a false breakout. If bears regain control of 1.1071 thanks to macroeconomic data and the price tests this level from the bottom up, the volume of short positions will increase. As a result, the British pound will dip to 1.1018 and 1.0955. At the level of 1.0955, it will be possible to go long, counting on intraday correction of 50 to 60 pips. Long positions at 1.1018 and 1.1071 will be relevant only in a case of a false breakout.